So let's look at BlackRock's Balanced Growth Portfolio Fund. Sounds good. Balanced and growth. Both balance and growth. And BlackRock, big, massive name. Now, let's look at 2023. Okay, this is November 2023 up to November 2023. By which stage, year to date, the NASDAQ was up 55% and the S&P 500 about 25% up, might be 24%. So how have they done in that time frame? Remember, 55% and 25%. Oh, year to date, they're up 4%. Well done. 4 bloody %. You couldn't be that rubbish if you tried. You couldn't do it. It's next to impossible. It's balanced and it's got growth in there. What did they put it in? UK smaller companies, 7.8%. And then, get this, they've got less than 2% in a ton of other stocks or equities or securities. So 44% in these, then they really have sprayed and prayed wide and far. Okay, they've got some bonds. I don't have a problem with the corporate bond side of things. They've got some S&P 500. Yeah, 4.7%. They've got less than 5% of their money in the S&P 500 the year the S&P 500 went up 25%, and they delivered you 4% in return. Absolutely fripping genius. That's balanced growth. That's not low risk. Hold on to your ankles. This is going to be really ultra safe. Oh no. And you know what? They should spend less time faffing around with ESG and the rest of it, because I'm sorry, I think this is bloody toxic. And somebody's pension has got screwed for another year because they had a bit of this.